Vignesh, can you please make me co-host?
Um, yeah, sure. Give me one second. Um, should I make it you as host or co-host?
Co-host.
Okay. Okay.
Good afternoon, everyone. Appreciate you joining a few minutes early, also taking the time out for today's webinar. And just to have an understanding of where folks are joining in from, I'm going to ask perhaps a few of you to unmute and briefly introduce yourself. Rex, I think you were in a previous session, right?
Yes,
Wonderful. Welcome back. Where are you
thank you.
joining us from today?
Dallas, Texas.
What's the weather like?
It's cold. Right now, it's cold. It keeps changing all the time.
Yeah, I think some other parts of the country are under a foot of snow or more.
Yeah. In the East Coast, yes, but not here on this side. There's a wave going on right now. The last 2 days, it's been low. Yeah.
Yeah, and I think Shweta, you joined the earliest. Are you dialing in from today?
Hi, this is my first time.
Wonderful. Are you based in the US or
Yes, I am in Houston.
Texas as well?
Yes.
Wonderful. Appreciate you making it to our
Oh
session
yeah,
today.
thank you. Thank you for your webinar. I appreciate that too.
Awesome. Yeah, we'll get started with the presentation shortly. And what I can start by doing is introducing myself and the work that we do here at Open Invest and Open Atlas. So my name is Nikin. I'm originally from India. I came to the US for my bachelor's studies close to a decade ago, and then went into startup soon after graduating. Was part of the founding team, scaled, exited a few startups, and that's how I went through my immigration journey from an F1 visa or an O1 visa, ultimately to an EB1A green card. But that's not something you're here to discuss today. It, my EB1A took me 3 times. So frustrated that experience that it led us to founding Open Venture, which is our parent company. Open Atlas, which is our community initiative. It's a 501c3 nonprofit. We do a lot of webinars and workshops on different areas to support high skilled immigrants across admissions, housing, jobs, and of course, visas. My personal focus area, what I do day to day, is actually EB5. I'm a registered representative, and I help applicants through 3 to 4 parts of the process, namely identifying the right projects, also working with immigration attorneys through the source of funds process, helping applicants with funding strategy, and related to that is funds transfer from India to the US and tax strategy as well. So we have a platform that we have set up to support applicants end to end for the EB5 process. And in today's session, we're going to go a lot more in detail on different funding sources, once the presentation is complete, I'll just open it up for Q&A. But during the presentation, if any of you have questions that come up, please feel free to use the chat function. If a question has already been asked, please upvote the question so we can get to it first during the Q&A piece. Without further ado, I'm going to get started the presentation. And we're going to cover a bit of ground today. So for those of you who are not taking notes, don't worry. We'll be sharing a copy of this presentation and the recording post the webinar in a day or two. I think all of you should be able to see my screen now. So today's session is just on funding the EB5, which is what are the different ways in which we can accumulate the $800,000 necessary to make an EB5 investment. And we'll be doing another workshop that covers what EB5 is, different subcategories, the immigration side, the investment side. Stay tuned for that in case you're new to EB5. You'd like to learn some more of the basics as well. Today is all about just gathering those 800,000 in funds and the different options that are available. And why am I talking about 800,000? So for those of you who have looked up EB5, there are two investments, 800,000 and there's 1.05 million. 1.05 million mostly applies to direct EB5. That's kind of beyond the scope of what you're going to cover. The majority of projects in EB5 are through regional centers, and the amount for projects through regional centers that fall in one of the three subcategories, rural, unemployment, and infrastructure, is 800,000. So since that's what most of you are likely to do as EB5 investors, invest through a regional center, one of these. Please, that's what we'll cover today. So, that being said, it's very important to understand what the source of funds process is. So USCIS is very particular on applicants are obtaining their funds from. They basically want to make sure it's $800,000 of white money. Keep it very simple. It's $800,000 attributed a lawful source. And what does this mean in practice? So let's say you work for an applicant works for Microsoft. The way you would show $100,000 of earned income is lawfully obtained is through a process of deletion. So what the attorney would do is the attorney would actually ask the applicant for 7 years of bank statements, records, and pay stubs. Okay. Different attorneys approach it a little differently. Some attorneys might ask for 2 to 3 years, 5, but more or less the standard now is 7 years. Now, why do they do this? It's because they go through a highlighter, quite literally, and they triangulate. So they say that we see a deposit coming from Microsoft for $10,000, $50,000. We see the taxes paid for this money. We see the employment verification letter confirmed individual works for Microsoft. So without any doubt, we're able to show that these funds or this tranche of funds is lawfully obtained. And as you might realize from what I'm sharing right now, it's a very tedious process, which is why typically there's a team of attorneys. There's an attorney, a few paralegals, and they take anywhere from 4 to 8 weeks on average to go through this process. A lot of it is dependent on the complexity of the source of funds. If you have 2 to 3 sources, then the process is completed. If you have more complex sources, then the process might take longer. So on a high level, that's what the source of funds process is. What's also important is the path of funds. The path of funds is basically how the funds are going from the origin to the EB5 investment. Now, why does the path matter? Because it's very important that every dollar of funding is personally attributable to the applicant. Because there are cases where, let's say, you have family in India and they have about $1,000 in funds, and they might ask a question. Hey, Nitin, should I transfer it directly to your account in the US, or should I transfer it directly to the project? It seems easy. Let me just directly transfer it to the project. But if you pitch this idea to an attorney, they'd be like, hell no, Nitin, don't do that. No. And why is that the case? It's because it's very important for the funds to touch your account first and then go to the project, because that's how we established the path of funds. And typically for EB5 purposes, what applicants do is once they have worked with the attorney to vet all of their different sources, they set up a new bank account. That bank account is what's used to pool the funds, and then it's transferred to the project. It's going to become more important as we go through different sources. I just wanted to give all of you this high-level overview. The source of funds is a pretty tedious process and also a lot of documentation, and the attorney leads it. And the path of funds is equally important. So it's very important that the funds are personally attributable to you. And as a consequence, no matter what the source is, the funds come to your account first before going to the project. With that out of the way, we can start covering a few different types of funds. So one of the most common sources that we see are HELOCs. So some of you might already be familiar. Some of you might have already received offers for this in your mail, your physical mail, if you're a homeowner, especially in the past 5 years. And for others, this term might be new. A HELOC is basically a home equity line of credit. The simplest way to understand it is it's like taking out a second mortgage on your home. Now, why would you consider this? Is because in the past 5 years or so, US real estate prices have close to doubled. Perhaps if we go back another 1 or 2 years, safe to make that statement, but it's increased significantly. So a lot of applicants are sitting on appreciated home prices, appreciated real estate value, and a HELOC allows you to borrow against that increase in value. And more importantly, you get access to very favorable interest rates. So it's of 0.5 to 1% over the market rate. And you can only make interest payments for the initial period. And sometimes that initial period is up to 10 years. So overall, it just becomes a very favorable mechanism of funding. Now, what's the process follow for a HELOC? Typically, most applicants reach out and connect with the lender that originally gave the mortgage. And sometimes they are already pre-qualified for a certain HELOC amount with that very same. Other times, you can go to a licensed loan officer and they can run a search for you. You can also look up different options online. In terms of how much you can secure, the most favorable loan to values that we have seen is in the 80% range. Of course, this is dependent on the value of the property and your background as a borrower too. But it's safe to say you can borrow to a very high percentage on the loan to value through a HELOC. Something else that's important to keep in mind is the processing. Likely, if the pre-approved everything is in order, likely still take the bank about a month to do all of the processing before finally dispersing funds. So timeline-wise, if you're in the process of filing or process of working with your source of funds, it's better to initiate the HELOC sooner. So in a nutshell, HELOCs are a second mortgage, very favorable mechanism to get funds for the purposes of making an EB5 investment. And you're able to draw out a large amount, 80% loan to value. Now, the one common mistake that we have seen applicants make is if they have bought property for someone else, they try to take a loan against that property. Usually it's very close family. Unfortunately, that complicates the source of funds process. Something else that we have seen, which is a common mistake, is applicants sometimes don't have thousand make down payment, and they might have borrowed that money from now. So what the attorneys would now ask for is, provided your friend get those funds to help you. So that friend is to now give 7 years of bank statements, tax returns, whatnot as well. So that's another common mistake that we have seen applicants make. Of course, it's very hard to know in hindsight or know at that time that we'd be perhaps using this for EB5 purposes. But in terms of documentation, it just complicates getting a HELOC so much more. So moving on, another very common source of fund is a 401k. And there are two distinctions that I want to draw here in terms of the 401k.
Nikin, Lavanya mentioned your voice is dipping in and out. So she's missing some points in full.
Okay. Let me try to change my.
Appreciate you letting me know. Hopefully it's better now. Vignesh, can you hear me okay?
Yeah, Anikin, it's clear now. It's better than the headphones.
Awesome. Thank you, Lavanya, for letting me know. Continuing where we left off, 401ks are also a very popular source of funding. There are two types of 401ks. One is a 401k with your current employer. So in that case, the employer is actively contributing to the 401k, and we are very limited with what we can do there. So the maximum we can do there is actually take out a loan from that 401k. So the maximum amount that we can take out is about $50,000. You do have to pay an interest on this loan. However, you're paying that interest technically to yourself because you're paying it to your retirement account. So just for formality's sake that you're doing that. And the other benefit is the loan that you take out from here. You can actually pay for it through regular payroll deductions. So I don't want to call it free money, but the way this is set up, it kind of allows you to draw up to $50,000 in a pretty straightforward manner without too much of an encumbrance on you. The important aspect here is the documentation. So the attorney would still want to see your account statements, the employer plan, the employer and the plan agreement, and also the loan agreement too. And the funds that you get from this, you typically would get a check. So you'd have to deposit the check in your account and then transfer the funds to the EB5 project. So overall, this is a pretty straightforward source of fund to tap into and leverage for EB5. Now there's another source of fund available that much fewer people are aware of, which is if you have a 401k with a prior employer, the main benefit here is if you have such an account, you can actually roll it over to the project. Now, what do I mean by that? So you basically change the account type from a 401k to a self-directed IRA account. The most common provider that can be used is known as Alto IRA. And once it's in a self-directed IRA account, you can basically change the trust key from, let's say, the S&P 500 or wherever the funds are now into the EB5 project. And because you're doing what's called a direct rollover, there are no taxes or penalties involved. And in this case, there's a unique exception that the funds don't touch your personal bank account. And the reason that's okay is you are actively directing those funds through the self-directed IRA. So it's under your control at all times. And in terms of the documentation, pretty straightforward set of documentation that the self-directed IRA provider and even the 401k provider would have access to. And this is a source of fund which a lot of applicants, we educate them for the first time, they're not aware of. And they might have anywhere from 50 to 100, even a few $100,000 available. And what happens to these funds is when the EB5 project matures in 3 to 5 years' time, it comes back to the IRA. So it comes back to the retirement account. So just to summarize, 401ks are a very common source of fund. There's limited flexibility we have. With a 401k with your current employer, we can borrow up to 50,000. But any 401ks with your former employers, we can roll it over. So we can use all of the funds for the purposes of EB5. And typically, there's no taxes or penalties involved in pursuing that path. Another common source of fund that we see is loans against stock. And here one can say there are a few different approaches, which is you can choose to liquidate your stock. But what we generally recommend is, as much as possible, don't try to liquidate. So especially if you have stock in Fortune 500 companies or the Mag 7, so to speak, it's very likely those stocks would appreciate in time, and especially over the next few years. So as much as possible, we encourage applicants to explore options to borrow against the stock. And that's what we're going to talk in a bit more detail right now. So yes, you could choose to liquidate your stocks, but ideally you want to check out borrowing first before making the decision to liquidate. Now, what are the common types of loans against stock we see? One is you already have stocks that are public. You have a portfolio or even a few stocks or even one stock, and you could borrow against that stock. Alternatively, you have vested stock. So if you're working in the tech industry, perhaps part of your compensation, a large part of your compensation is in the form of RSUs. And over time, they have vested and they are sitting right now in a Charles Schwab, E-Trade, or Fidelity account. Based on the size of your portfolio, regardless of which type of stock we're talking about, you probably have a client relationship manager. So they are a great resource for the purposes of evaluating this option. Now, when you're considering borrowing against stock, in terms of the interest rate, typically it's the prime rate and up to 3% over it. And what that translates to typically is around 7% is what we have commonly seen. But based on the holdings you have, it can be lower than that as well. So most of the brokerages have tiers. So if you're able to move a part of your portfolio to one brokerage, you can be in a higher tier and you can effectively lower your rates. The lowest rates we have actually seen is from Robinhood. So if you have upwards of 800,000, close to like 900,000 there, they are giving a rate of 4.7%. Again, please don't hold me to it. This is information I know through an applicant. It might be different for you based on your background. But a lot of applicants have reported that Robinhood has the best rates as a brokerage. And how much can you get? For most well-performing public stocks, it can be as high as 70, 80%. And let's say if your net worth is concentrated in just one stock, we have seen the brokerages say as low as 30%. So this is where speaking with that client relationship manager really comes in handy. And again, similar to the other options that we have explored, you can do interest-only payments. So it saves you from making principal contributions. You want to keep in mind the timeline. So even when everything is in order, the brokerage would still take 5 to 10 business days to initiate any kind of fund transfer. So there is a lead time involved in this process as well. And there's a standard set of documents and agreements that the attorneys would ask for, and that the brokerages would have to support you for your EB5 process. Now, what's the most common mistake that we see in stocks in general is if an applicant is actively trading. So let's say you have vested stock in Fidelity, you have sold some of it, now you started actively trading that stock, as in a lot of buying and selling, then that complicates the source of funds process. And very likely the attorney might say, hey, this $50,000, it's very hard for us to document and show to USCIS. So do you have another alternative source for this 50,000? And I wouldn't say that's really a mistake. It's more, it becomes very time intensive of a process to document from an SOF perspective. And an attorney wants to simplify your petition for the officer as much as possible. So they just strongly recommend not using these funds, if at all possible. And again, this is kind of I don't want to say the only complication, the most common complication or avoidable mistake that you see when it comes to stocks, which is very active trading on one or more accounts. Moving on.
Nitin, there are a couple of questions that Lavanya and Nav asked before on the 401k.
We'll get to the questions at the end.
Okay, sure.
Yeah. Moving on, in terms of unsecured personal loans, this is a very common set of questions that we get is, hey, outside I've explored HELOCs, I've explored 401ks. What about unsecured personal loans? What's very important from a USCIS perspective is to show that you're taking out an unsecured loan as a choice and not a necessity. And what do I mean by that? Is what portion of your total funding is coming from an unsecured loan? So we typically, attorneys, I mean, it depends on who you ask, really, but they recommend not more than 50% coming from unsecured loans. And ideally, it's a lot less than that. Maybe there's a $50,000 gap, $150,000 gap that we are looking to plug with an unsecured loan. And for that purpose, it's a very suitable strategy. But if we're thinking of combining different loans to make up the full 800,000, most attorneys would caution or even have a very negative view of that strategy. And the main reason being, at a certain level, an unsecured loan is reliant on your ability to make payments in the future. So it's basically a lender taking a bet on your earnings potential. And USCIS, from their perspective, they look at it like, hey, we don't see your capital at risk because you haven't put up any collateral right now, and this lender is taking a bet on your future earnings potential. We can argue either way. That's kind of the thought process. USCI as follows, which is why it's very important to have a balance in your total funding and to keep these ideally as low as possible. Now, what are some common lenders that we have worked with? Are the three that we are sharing right now. The key thing to watch out here is the interest rate. So the lowest rates that we have typically seen is around that 8% mark. And this is for applicants with a very good credit score, so over 750. They have very low debt to income, as in if you take their other liabilities, whether it be credit card debt or mortgages or any other liability, their incomes far surpass that. So there are a few preconditions in which you're able to maximize the loan amount and minimize the interest rate. But in terms of the process itself, it is it's a process where you kind of have to do a search. And it's also a process where you can negotiate. So you can actually speak to different lenders, pit them against each other, give them an incentive saying that, hey, I'll move my savings account here, I'll move my checkings account here, you'll be my primary bank to do business, and you can get a better deal from them. So this list isn't exhaustive. So we have a list of about 20-25 lenders that applicants have used, and happy to share that in a follow-up email. And in the other context I'll share here is sometimes applicants ask, what if I take out a loan in India and then transfer it to the US for EB5 purposes? From the USCI standpoint, that's perfectly acceptable. The documentation on the path and the source of funds doesn't change at all. However, we have to be aware of RBI regulations in that context. Even the RBI, they've become a bit more flexible, but certain banks where you're taking the loan from, they might have rules that you cannot take those funds out of the country. So they have export restrictions on any kind of loan funds that you're taking. But at the same time, other banks are flexible, as in the loan agreement, they don't have any restrictions on what you can do with the loan funds. And in those situations, you should be able to transfer them out of the country. And we'll speak about it a bit later on how to even do the funds transfer from India to the US. This is another area where we can spend a lot of time. Actually, it's material for a whole nother webinar altogether. And just to expand on this for a moment, over the past year and a half, 2 years, what's happened is a lot of regional centers, they set up sister entities, as in the founder of the regional center or another party of theirs. They pooled a set of funds and they started giving loans to individuals. So these loans were primarily set up as unsecured loans at an interest rate of 6 to 8%. And you did get up to $400,000. So you did get up to 50% of the overall amount. However, what happened is initially, like a dozen or so applicants got approved. Then there was a pioneer in the regional center space who set up the first loan program. And very quickly, another 15 loan programs became active and they became fast followers. And USCIS continued approving petitions. So over the course of a year and a half, they probably approved 70 odd petitions for close to 100 plus applicants. But all of that changed in October of last year. So starting in October, any applicant with a regional center loan has been unfortunately impacted with RFEs, NOIDs, and denials. And the thought process that the attorneys have right now is that, hey, it's USCIS not interpreting their own policies in the correct manner, because none of the facts, the matter has changed in a year or so. It's just that they decided to increase the regulatory scrutiny. And people in the field are confident that this will be successfully resolved through appeals and maybe even litigation. And the main reason being, no one in the EB5 space, I mean, if there's one label that people in the EB5 space do not want to be associated with, is that of being an innovator or being called an innovator. This is an extremely traditional and risk-averse space. I mean, many times you think that why aren't they even using digital signature tools? So that's how old-fashioned everyone is. And the reason is it's a slow-moving field. If something works, they don't want to change it at all. So these loan programs, when they were set up following all of the rules that were in place, taking the feedback of the best attorneys, former USCIS officers, former USCIS section chiefs. So they're compliant from the beginning. And every now and then, once you're in immigration, you realize that sometimes immigration is like reading tea leaves. And what I mean by that is attorneys have a consensus when they submit a bunch of applications. USCIS gives RFEs and they scratch their heads, get together and form a new consensus. And the challenge is there's no one at USCIS you can call in order to understand what the new rules are or how they are interpreting the rules. And no one from USCIS even shows up to any of the immigration attorney conferences. So the only way for the attorneys and the field to know what USCIS is thinking is by waiting for responses on a batch of applications. So just a long way of saying is that these loans have been around for close to 2 years. They were set up with the best intentions, following all of the applicable rules. And then USCIS started interpreting the rules differently. So currently, what's happening is most of the regional centers have stopped issuing these loans. So there's kind of a pause in the field right now. That being said, there are still maybe one or two that have learned from the RFEs and the denials. They have made modifications to their loan programs and they are still issuing loans. The best way to leverage this, given everything that's happening, is to actually not use the loans as a source of fund. Now, what do I mean by that? This is, again, being a little creative. Let's say you're able to arrange the full 800,000 yourself. mean, you initially have 500,000, another 300,000 you're able to get as gifts from friends and family, then that's well and good. So you're going to use that for the purposes of EB5. And maybe you've just stretched yourself financially to make that happen. You can use the 400,000 from this regional center affiliated entity as just a source of liquidity. So think of it as there's 400,000 available for you for liquidity purposes, and you just cannot show it in your source of funds documentation. So that would be kind of the best practice and safest approach. Think of it as a very compliant workaround to the challenge that we are seeing today. I just wanted to give some time to cover this because I'm sure a lot of you, if you have started looking at loans, you'll likely come across the regional center loans as well. Now, one important piece of this is, especially if you have funds in India, is transferring them from one country to another. And people have some confusion on how to do that. And again, this might just apply to a portion of you on the call today. Basically, there are two types of bank accounts you have. You have an NRE account and you have an NRO account. So with those account types, there's also the classification of whether you are a resident Indian or a non-resident Indian. And that's determined by how many days in a calendar year you spent either in India or the US. So let's say for resident Indians, there is a restriction. So you can only transfer up to $250,000 per year. A family, you can do $500,000, but therein lies the flexibility. So let's say you have siblings. So for each PAN card, you can do $250,000 a year. So even within close family, you'll be able to make that $800,000 happen. Now, what does this limit really mean? The limit applies because you can transfer these funds out of India without a tax liability. So the tax involved here is known as TDS, or tax deducted at source. And in order to be eligible for a TDS exemption, we just need a certificate from an accountant, and we have to fill out one or two forms. So that's pretty straightforward work. Now for NRIs, for those of you who live outside of India for more than 6 months in a calendar year, you can kind of disregard what I've shared before, because there is a lot of flexibility when it comes to transferring funds. You can actually transfer up to $1 million per year through your NRO account. So you still need a certificate from the CA confirming that you fall in the NRI status and the path of funds is compliant as per RBI guidelines. But this kind of answers a lot of NRIs' hidden question in their mind, so to speak, is, hey, if I'm transferring funds from India to the US, will I be impacted with any kind of tax liability? In most cases, the answer for that is no. Now, to give you an idea of what a typical EB5 investment looks like, so most applicants in our experience have 2 to 3 sources of funds. And this is one of those examples where an applicant took out a HELOC for 400,000 They then took out a loan from their 401k for another 50,000. And then they were able to sell property in India and then get that transferred. And here, if you're kind of reading the fine print, it says property sale proceeds transferred via NRE account. So in this example, what I wanted to share is they sold a family property or an ancestral property, which is why they had to get it through an NRE account. I mean, there are many different examples that we can share. In the interest of time, just wanted to cover one example to give you a visual understanding of how an EB5 investment amount comes together. So what even the attorneys would kind of share in terms of best practices is, of course, their traceability of every dollar of that investment amount. And sometimes this traceability you only know once you've started the SOF process, right? Once you've retained an attorney, started uploading the documents, and the attorney starts going through the documents. And some examples of this, if you remember, earlier I mentioned that one of the mistakes we saw with HELOC is people borrow from friends and family to make a down payment on a home. So that becomes an issue. You've also seen people borrow to make their mortgage payments. So if you're trying to use a HELOC as a source of fund, the entire workflow matters, which is how you bought the initial property, how did you continue to make the mortgage payments. So let's say you got some funds from friends and family for any of those payments, then that impacts the ability to use HELOC as a source of fund. What also might impact it is, let's say you withdrew some amount from your bank account as cash and you deposited that cash back later and then used it to make one of the mortgage payments. It's still your funds and you're well within your rights to do that. However, when taking that action, you changed the source of funds. So now you have to explain where you actually got the cash from, because it's a new source in the eyes of USCIS. Not to delve into this in too much more detail, just wanted to share one or two examples on how this might be a bit more complex than it appears. And we only know how long it would take if a particular source is a good source once you start working with an attorney. The other rule of thumb to understand is anything with collateral, we are much better off with. And finally, simplicity. So ideally, you want 2 to 3 sources of funds, ideally 1, but being practical, applicants have 2 to 3. We have seen applicants have even 5 or 6 sources, but keeping things simple really helps the attorney and helps us build a successful petition for USCIS purposes. Quick set of thank yous and next steps. I'll stop sharing my screen and go to the questions in just a moment. But hopefully this gave you an understanding. Some different sources would help you start evaluating those different sources and start collecting the necessary documentation as well. The entire source of funds process falls under the perspective of immigration attorneys. If you haven't connected with one already, please email me and happy to share a few recommendations of best-in-class attorneys. And for each source, of course, there's an exhaustive exercise involved to gather the documentation. And if any of you have further questions, please feel free to book some time to connect one-on-one. We'll share this link in the chat we'll share it in the follow-up email too. And happy to give more personalized answers based on your context. Awesome. We have quite a few questions. Now asked, if you had rolled over a prior employer's 401k to an active employer, and now all of it is in the active employer's account, can you transfer the prior employer portion to an SG IRA? Unfortunately not. So now it just, the entire funds is in the new 401k and it's considered as such. Lavanya asked, can we convert the current employer 401k to SG IRA? Again, unfortunately, the answer is no. And yes, Kunal answered it well, which is the current employer is actively contributing it. And the plan agreement they have doesn't allow you to do that. Nath asked, is there a limitation of loan on stock options or SBLOC? I think I know what you're referring to. The only limitation is based on what you're drawing it out against. And what I mean by that is, let's say if you have 1.1, 1.2 million in stock, very safely you can draw out 800,000, especially if it's in an index fund and some kind of diversifying portfolio. Other than that, there's no other limitation. It's just the loan to value that ranges. You get a higher loan to value based on your portfolio. You also get a higher loan to value based on the tier you're in. So the more amount you have in a brokerage, the more they are even willing to lend to you. This is something you can confirm with the client relationship manager at the brokerage that you currently have your portfolio with. So hopefully that answered your question. Kunal asked, if there is an issue, is there an issue if the Indian property that you own has your father's name on it along with your own name? In case if you want to use that as collateral for a loan from an Indian bank. Any asset you have can have co-owners, whether it's like a bank account, a property, or other type of assets too. So that's generally not an issue. What USCIS cares about is with what funds did you even acquire that asset, right? So were those initial funds lawfully obtained? So they care about the provenance of the funds versus who is the current owner right now. It does matter. It has to be documented and explained to the officer clearly as to who the owner is or co-owners are, how then those funds are yours. But other than that, it can be used. So there's no prohibition against having multiple co-owners or any kind of asset. Awesome. Oh, we're almost at time. Didn't realize time pass. Kunal asked a follow-up question. Do US banks provide loan against an Indian asset like a flat in Mumbai? That's a good question. Unfortunately not, because RBI rules prohibit that. So they prohibit any non-Indian financial institution from using any assets in India as collateral. So the banks here don't have recourse if you were to default. So they cannot go and get your asset in India. So as a practice, they don't lend. That's a very good question. And that's why not to digress, but even refinancing student loans is such a big hassle is because the different financial jurisdictions, they operate in almost like silos. Varun asked, could you tell me a bit more about gifts from parents and siblings and cousins? If the property in India is under my father's name, can they take a loan and gift it to you? So the best way to understand gifts is they are basically any person giving you a gift becomes a mini EB5 applicant themselves because the attorney would ask them for 7 years of bank statements and tax records. So that way they're able to thoroughly vet and show their source of funds. So that I would say is the fundamental requirement for someone gifting you funds. Because a lot of people, when you go and ask them, hey, can you support me for EB5? Can you lend me 50,000, 100,000? They're willing to do that. And then they're like, what else do you need? It's very important to tell them that I need 7 years of bank statements. And that level of transparency, it takes time for people to be comfortable with. But that's what's required from a documentation standpoint. Now, coming to the other part of your question, if the property is in your father's name, can they take a loan and gift it to you? Yes, they can. Again, similar to the questions or the slides that we had covered, the points we had covered earlier, which is how was the property initially purchased? If it's an ancestral property, you're exempt from showing that, which is any property older than 20 years. You don't have to show that. A simple deed is enough to say it's an ancestral property. The second thing we have to check is, does the bank you're taking the loan from allow you to transfer the funds overseas? So you do have to see the bank terms and conditions for that. And if they are silent on it, so if they don't explicitly say, hey, you cannot do this, then you should be able to do it. So before, the RBI was very strict about it at a national level. Now they have loosened the regulations. That's up to kind of each bank to decide how to police the loan holders or the borrowers. Hopefully that answered your question. Lavani asked, when you move funds from India, there's a lot of loss in change of currency. Is there any workaround? Unfortunately not. So everything here has to be done by the book, so to speak. So you do have to go through official money transmitters and such. The flexibility that you do have here is you can speak to a bank, like for example, ICICI Bank, and you can get preferential bank rates for money transfer. And this is possible at larger amounts. So if you're talking about $200,000, $300,000 or more, so individuals rarely transact that on a regular basis, but companies do. And the banks actually give the companies a preferential rate for having their business. And that's something you can ask for and enable on your personal transfer as well. So to answer your question, there is some, just given the amount that's being transferred, there is some efficiency that's possible where we can save on some exchange fees, but not by a whole lot. Nikita asked, what are the sources of funding outside of HELOC and 401k loans? Sorry, I may have missed this. We'll give you a copy of the recording. So we covered unsecured personal loans, we covered regional center loans. Of course, there's earned income as well. There's gifts from friends and family. So there's quite a few other sources of funds that we can leverage. We're almost at time. happy to take another one question. And for those of you who have further questions, please feel free to schedule a one-on-one time and we can continue the conversations. Arun asked how that loans are treated as a liability. It depends on whether it's a secured loan or an unsecured loan. If it's an unsecured loan, as I shared earlier, you want to keep the amount of that out of the total 800K to a minimum. So USC has just frowned on unsecured loans. That being said, if it's a secured loan, so if it's secured against some kind of collateral, that is very favorably looked at by USCIS. And again, even with unsecured loans, the documentation is heavier. So it's not, no attorney would be like, don't use this as a source of funds. It's a very viable source of fund. But they would ask you, hey, do you have any other source of funds? Can we minimize the amount of unsecured loans that we are using? Awesome. Thank you all so much for taking the time to join today. And again, we'll send out the slides, we'll send out the copy of the recording too. And if you have any questions, please feel free to shoot me a note. My email is nikin@openinvest.com. And if you'd like to continue the conversation in person, then please feel free to schedule some time. I'm happy to connect one-on-one. Have a wonderful rest of your weekend and really appreciate making it today.